What's up, guys? Stas here. So the stock market had a rough day today. S&P 500 down 27 points, down 0.8%. Dow Jones down 104 points, down almost 0.4%. And the Nasdaq tech got crushed. Nasdaq down 210 points, down about 1.9%. And in this video, we're going to be talking more about the stock market, breaking down some technicals here, going over whether or not this is the start of a crash, whether or not we might see some consolidation here. I want to go over where I see the markets moving forward here. And as always, we're going to be breaking down the main stocks that I'm looking to buy as we're getting deeper into August, as well as some earnings reports, what I've been doing in the markets, and in general, where my head is at as of right now. So a lot to go over in this video. If you guys find value, as always, hit that like button for me. Consider subscribing to the channel. Join our free Strive Smart Discord chat and our free Strive Smart Facebook group, link down below. And you can also get 2 free stocks, link down below as well, from WeBull. Those are valued up to $1,400. All you have to do is deposit $100 using my link down below, and you get 2 free stocks, and I also get 2 free stocks since it is an affiliate link, and those proceeds do help me out in all the free content that I'm putting up here on YouTube, and I do appreciate you guys if you do use that link and get 2 free stocks. So let's get into the video today, starting off as always with the S&P 500 here, and again, we were down about 1%, 0.8%, but it's closer to 1% than 0.5%, so we might as well round up and say about 1% in the hole today on the S&P 500. And earlier in the day, it seems like, the markets were up and actually winning, right? You guys can see the bulls were in charge. 33.80 hit. That was a high from, these past 5 days of trading here, as you guys can see on the 5-day, 5-minute chart. And quite honestly, guys, I was out of tune with the market these past 2 hours, but I'm pretty sure some, political dramas going on. Something is going on to where the market sold off. You guys can tune in down below there in the comments, but ultimately the markets ended up selling off here, and the S&P 500 ended up holding 33.30, which we've talked about in recent videos as a pretty big level of support. I mean, we held that back on the 7th of August, back on the 10th of August, which was literally yesterday. And this is a level of support because it was a level of all-time highs back in the month of January. You guys can see 33.30 was an all-time high. So ever since we broke 33.30, right? That was a resistance, old resistance. We've been looking at it as a big support on the S&P. And guys, we almost hit all-time highs today on the S&P, about 15 points short. I mean, 33.81 hit. All-time highs are around 33.93, so about 12 points short here for the S&P, away from all-time highs earlier on in the day. And again, the pull down and especially the close above 33.30, that is a pretty good sign here for the bulls overall. And one could argue that markets were a bit overextended, right? 33.80, the RSI was overbought at that point. It was above 70, so one could argue that this was a very healthy pull down overall for the S&P 500. And you may be asking yourself, Stas, you have market crash in the thumbnail, and you're saying, is the market going to go down further here? And the truth is, guys, I'm not saying the market's going to crash. I'm just saying that there's rotation here, and we'll get into that in a second, but that could maybe end up having some stocks in a particular sector seeing a bit of a sell-off, and we're already seeing that. And before we do get into that, we did get some good news earlier today from the vaccine from Russia, and Russia's president Vladimir Putin said Tuesday that Russia became the first country globally to give regulatory approval to a CV vaccine, with the move coming less than 2 months after human testing of the inoculation began. The vaccine still must complete final trials again, oh my god, I can't speak, though mass production is expected by the end of the year. So that did shoot up markets I would say earlier. I think this news came out overnight, pre-market earlier in the day. And, that shot up markets, but one market that I think, the stock market, that is S&P, Nasdaq, Dow, but one market that I think that affected was the precious metals market. And we'll also get into that here in a little bit. So we're seeing a little healthy sell-off here in the S&P, nothing crazy. I would not consider this a crash quite yet, but if we're looking at the Nasdaq, and this is where we're seeing some stocks, maybe people are starting to think, they could be crashing. We're seeing big tech names, Netflix to name one. Netflix is down about 100 points from the peak. That is roughly a 20% drop. Other names such as, Zoom. Zoom's down a decent amount from the peak here. It's down about, 20%? And there's many other names. Tesla. Tesla's down a very big amount from its peak, although it's up here after hours. I'm not sure why. There could be a catalyst, but Tesla is up down about 20% from its peak. So we're seeing a lot of these stocks actually get into correction territory, because what you guys must understand is, actually, no, they're past correction territory. They're almost getting into bear market territory, because, listen, a correction is whenever a stock sells from its peak down 10%. That is considered a correction. So from its peak, 1790, Tesla's down over 10%. So it's over correction territory, and anything over 20%, that is bear market territory. So a lot of these stocks, I know it's crazy, but a lot of them are peaking into bear market territory, as many of them are down over 20% from their recent highs. Another one here is Shopify. We'll get into this one in a little bit, but this one's down, about almost 15% from its highs. So you're understanding here that many of them are quote unquote crashing. They're down 10-15%, but the charts on the flip side aren't looking too bad. So this could be maybe, just maybe, an opportunity, right? And when it comes to the Dow Jones, we're seeing it down 0.4%, down $100. Not much damage there, as a lot of the damage, again, is coming from these tech stocks. Dow not being a big tech index, obviously, right? And it's only down 0.4%. Overall, it's holding 27,400, 500, which is a big level of support here. So overall, the bulls are in charge on the Dow. And one thing to note, earlier we actually failed breaking out of 28,200, which is the next resistance that I'm looking at here. And you guys can see it on the 1-day, 1-minute chart. That's actually exactly where the Dow gapped up to, and it failed breaking out of there, breaking out of 28,150, 28,200. So those are some levels I'm looking at. 28,002 on the Dow on the upside, and on the downside, I'm looking at around 27,400 to 500. And when it comes down to the Nasdaq, again, some of these tech stocks are getting into bear market territory, and it's because we're seeing a rotation here in money, right? We're seeing a lot of these big firms. One could speculate this is happening, right? We're seeing big firms. We're speculating institutional money here is moving from a lot of these overweight tech stocks. A lot of these tech stocks that have run up on the pandemic fears. It's funny. Back in the previous recession, companies such as, Johnson & Johnson, McDonald's, stocks like this were considered safe, right? But nowadays, it's the tech names, right? It's the stay-at-home stocks that did very well during this crisis. And now we're seeing, with this vaccine news, hopes of a vaccine coming in the future, and finally, maybe just maybe, the light at the end of the tunnel. Now that we're seeing this light at the end of the tunnel, now money is, smart money, institutional money, starting to think, and they're like, okay, maybe we'll take some profits off the top now of these tech names. They're overvalued anyway. So maybe, just maybe, we'll take some profits there and just funnel them into the beaten down stocks, as they might recover and do well, since we see the light at the end of the tunnel. And once their economy opens up, they'll do very well. And that's kind of what we're seeing here, why we're seeing a lot of these tech names crash, and we're seeing a lot of these other restaurant names, hotel names, airlines. We're seeing these do very well. To name a few, AAL, American Airlines, is up a pretty good amount over the past couple of trading days, from $11 up to about $15. DAL, Delta Airlines, another airlines company, is up pretty good amount over the past couple of days. Wynn Resorts, it's a casino play, up 10% today. I'm pretty sure yesterday it was also up 10%, so a 20% move to the upside. So we're seeing a lot of rotation money here. Not saying the market is crashing. I don't think it's crashing like we saw back in March, February. I'm not saying that whatsoever, but I'm thinking that, and it's very obvious, stocks are coming down and money, tech stocks are coming down and money's moving into some of the beaten down areas. Another big one, PK, it's a hotel chain here. It's up a good amount. MGM, I'm sure, is up recently. Oh, yeah, it's up. Of course it's up. It's up from $15 all the way up to almost $23. So you guys get the point. The beaten down stocks are starting to see a resurgence here. And does this mean that they're going to the moon now? Everything is all dandy yet again? No, the truth is it doesn't mean that, but in the short term it means that we could continue seeing this direction. But overall, I do expect tech to recover eventually. These next couple of weeks, I do see it recovering. It's just a matter of when. And I'd love to know what you guys have to think about that down below in the comments. Let me know right now, please. I love talking to all you guys every single day. And on the point here of gold and silver, these are viewed as one reason why it could be dropping today very heavily, is these are viewed as safe haven assets. And again, now that we're seeing the light at the end of the tunnel, we got vaccine news here from Russia. Who knows, what happens there in the next couple of months. That's good news nonetheless. People are maybe selling out of their precious metals and going into maybe cash, going into maybe some of these beaten down stocks. You guys can see gold is down 118 points, down 6%. This is no joke. This is insane. This sell-off is ridiculous. And honestly, it was much needed. As much as I like gold, I'd be the first to tell you it did get a bit overheated. The RSI was very hot. It was over 80, and it almost hit $2,100. It literally went from 1,800 to 2,100 with no pull downs since July 20th, guys. That was only 20 days ago. So this is a much needed pull down. In that rally, it went up about 13% from 1,800 to 2,100, and now it just gave back about 6%, 7 or 8% from its high. So it's still up about 5% overall from the 20th of July. And in my opinion, hey, 5% in about 20 days, that's still very good. And honestly, I'm looking here on the 180 SMA. This is a big technical spot on the 4-hour chart to see if gold ends up holding there. And when it comes down to silver, another big spot to watch out for is around $25. Silver went, from $30, very hot, RSI overbought. It's very evident, right? You guys can see it. And now we're seeing the pull down on silver. We failed to hold the 50 SMA, so that's leading me to believe, hey, silver could be going down to maybe $22.50 to $23, right? That is right around this 180 SMA on the 4-hour chart, and we're down. Did I say 13%? I meant to say 15%. So this is no joke of a sell-off here. That is a lot of loss in just one day. And quite honestly, guys, I am still long on gold, silver. I'm looking actually to buy into maybe some ETFs here, and we'll get into them in a couple of minutes. But overall, I'm liking this pull down, much needed in my opinion. And now we're trading back in healthier territories, and now it's a waiting game to see if people bid the price up. Are bulls going to come back in and push it up? And if we see that, that could end up being our confirmation to jump in. So we'll see what ends up happening. But overall, I'm not panicking. I'm not selling any gold, silver, and none of that. Honestly, if anything, I'm buying more. And I'm just long, guys. So overall, those are some thoughts on the market, precious metals, what's going on. And when it comes down to my trading, I didn't do much today. Quite honestly, I didn't do anything. But I am holding cash, and I'm looking to get into some of these maybe gold ETFs, silver ETFs, and some of these stocks that will go over. But I'm still holding upward. Sorry, guys. My throat. Oh, my goodness. I'm still holding Upwork at 1440. I'm still holding Netflix, believe it or not. I'm riding out the volatility. I'm down a good amount there on Netflix. I'm in at about 495. And I'm also still in, believe it or not, Fastly. And Fastly is a very small position for me, quite honestly. So the fact that I'm down about, I don't even know, to be honest, how much on a percentage basis. Let me pull it up here and let me take a drink of water very quickly, guys. But overall, Fastly, I got in at about $91, and yeah, I'm down a good amount, but the fact that it's only a small position for me, very tiny, I'm not sweating it. So I'm holding through the volatility, and like I've been saying for weeks on the channel here, guys, months, quite honestly, I have a lot of cash in my account, which allows me to ride through the volatility because I'm not forced to sell a position. I'm not, itching for cash. I'm not, oh, I need cash because I have cash on the sideline, so I don't have to sell out of Fastly here at a loss. I can just kind of let it ride, right? Same with Netflix, same with Upwork, right? And same with my workhorse position, WKHS, which also got hit pretty hard today. Actually, no, it was up today. Wow, it was up 0.3% today. Earlier, it seems like, if I remember correctly, it was down. It was down to about 1505, but overall, those are what I'm involved with right now. Workhorse, Fastly, Netflix, and Upwork. And to get into some earnings today, NIO ended up reporting, and watch out for tomorrow, guys. I'm going to do a video more in-depth on NIO's earnings, going over their growth year over year, a bunch of different metrics, and where I see it going in the future. So make sure to stay tuned for tomorrow's video and turn on the notification bell if you're on mobile. Go next to my name, hit that bell, make sure all notifications are turned on, and if you're on the desktop, you can do the same thing as well. So every time I upload a video, you guys get notified so you don't miss any videos. So NIO ended up reporting EPS today of negative 15 cents versus negative 26 cents. So they crushed EPS there, and revenue came in at $526.38 million versus $503.58 million. And they also expect vehicle deliveries for quarter 3 to be between 11,000 to 15,000 vehicles. And if you guys recall, we got vehicle delivery numbers for July. Those were up about 300% year over year. Incredible growth there. And I believe they did about 3,500 vehicles in July, and they also see Q3, which is the next quarter, sales guidance of $570 million to about $596 million versus the $537 million estimated. So they beat EPS, beat on revenue. They beat guidance, sales guidance, which we all know is a very good sign for the stock market. And the stock is down. The stock's down 10%, guys. It was actually up pre-market almost to $16, and it dropped all the way to almost $12.90. So that's a sell-off of about 20% in just one day. And quite honestly, on good earnings reports, on a good earnings, I'm looking at this as an opportunity and maybe an overreaction. And honestly, another argument there could be, hey, maybe the stock was pricing in, perfect earnings, and then it dropped on maybe, not as good of earnings as expected. But I'm not buying that, quite honestly. I think this is an overreaction to a solid earnings report. The technicals are backing up this being a good entry point, but now we just have to wait and see confirmation of about $13. If it holds 13, rallies into 13.50, I think this could be no problem going back up, let's say, to the 14s, maybe back up to the $15 territory. So overall, guys, very good earnings for NIO. I'm long the company. I think it's going to recover, but always do your own due diligence and do your own research. And stay tuned for tomorrow's video. Again, I'm going to make a more in-depth video just on NIO stock. One of 2 videos for tomorrow. So make sure to subscribe for that. And overall, guys, that's it for earnings today. I'm sure there was a lot of other companies out there, but NIO was the main one that I was watching. Let me know down below in the comments, what are your thoughts? Now, let's get into some other stocks here that I'm looking looking to trade as we're getting deeper into August. Twitter is one big one here that, got some hype. Recently, we got news that Twitter could be getting in the TikTok deal, maybe stealing Microsoft's spotlight. That's why we saw Microsoft sell off, and then Twitter ended up spiking up that same day. So overall, not saying I'm going to jump in and buy Twitter here, but I think it's worth watching, keeping on the watch list here, because overall, if we do get news more about TikTok, Twitter, we're trading about $3 off the highs. That's about an 8% sell-off here just from yesterday. We could get a spike and some move back up to the 40s, which I think could be a tradable move there. And overall, it seems like 37 has held pretty decently over the past couple of weeks for Twitter. So we're just waiting to see for that move, for it to make up and for that confirmation, and we'll jump in there. Caterpillar is another one, broke out of 140. Finally, it was yesterday. We rallied up to the mid 140s today, pulling down to 142, looking to retest 140 as a new support. I'm loving it here on Caterpillar, guys. Quite honestly, we've been talking about this one ever since $130 here, ever since it reported pretty solid earnings and dropped after and held 130. I was telling you guys how this one, big potential up to 140, and from 140, big potential up to about $150. So at this point, if 140 holds for tomorrow, maybe on Thursday, whatever, we'll see what happens. This could be a one that moves back up to the 150s. And another one here that I think, guys, I've been on record saying this, I think Starbucks is going to be one of those companies that recovers very quickly as we're getting closer to that light down the tunnel, as we're getting back to normality, vaccine, once everything's put behind us. I think Starbucks is going to be one of those companies that gets back up to the 90s and maybe over $100 per share. And today we got almost 2% move. We got a test at $80 again, and $80 is a spot that we've been struggling at for months, guys, for almost 4 months. It's ridiculous. Ever since the middle of April, this thing's been struggling at 80. It's only cracked 80 once, and that's when we rallied up to about $83. So overall, I'm watching it and seeing if it could eventually take $80 out. Maybe we find support there, consolidation, make a move back up to the mid-80s. That's kind of what I'm watching here for Starbucks. And Cheesecake Factory, ticker symbol CAKE, is one that actually broke above a big resistance today, $27, and it actually pulled down, closed above roughly $27, which is really good. Now I'm looking to see if it could make a move back up to 28, which is where we were earlier today, which could be around a 4% move from around $27, which is where we are at right now. So watch Cheesecake Factory again as money rotates. Some of these beaten down stocks, restaurant stocks, could be getting some more capital. And GLD, this is a gold ETF that I'm looking at here on the gold weakness. This goes up whenever gold goes up. It literally just tracks the price of gold. And we've gotten a pretty good sell-off, from 180. We dropped down from 195. That's about a 10% correction. So honestly, guys, I might pick up some shares tomorrow, and honestly, I might pick up some options too. And I personally trade options on WeBull. If you guys don't know, I'll link a WeBull options video down below if you guys want to check that out. And don't forget to claim your 2 free stocks also down below, valued up to $1,400 with a $100 deposit. And I might buy some calls. I might buy some calls here, maybe $185 calls a couple months out. I have to see what calls are out there for GLD. And SLV is another one. Literally, it's the same thing as GLD, but it tracks the price of silver instead. And SLV is down a fat chunk today, down about 14%, and it's down about almost 17% from its highs here. So watch SLV, watch GLD. Those are at the top of my list. Same thing with the gold miners, GDX. That one probably got crushed bad. Yup, it did. I haven't checked it since earlier today. It's down about 8%. That's a very bad day for GDX. And GDXJ is a gold miners, junior gold miners ETF. GDXJ was down about 9% today. So all of these, I'm looking at the weakness as a potential opportunity, and many people view it the opposite way, and that's kind of why I'm trying to change your mind, not on gold ETFs and gold stocks, just in general, guys. When you see weakness in the stock market, whether it's tech stocks, industrials, gold stocks, whatever, whenever you see weakness, program your mind to not be scared and freak out. Program your mind to look at it as a potential buying opportunity. Then you can dive deeper in and do research to verify whether or not it is a buying opportunity, right? So watch another one here is Ulta. Watch this one. I'm watching for a 220 break here. We got rejected earlier today, but anywhere above 220, I think Ulta could get back up to 250. No problem. I mean, 250 is where we were back in the beginning of June, and the stock's been beaten up like crazy since then. So I'm watching Ulta for a big recovery here. Shopify on the tech side of things, like I said earlier, down about 13% from its highs, still holding this 4-hour simple moving average here, the 180 SMA. So this could be a dip buy if tech ends up recovering. Square is another one, SQ here, that could be a pull down or a recovery if tech ends up bouncing back, right? Square trading at about 135 right now, holding that 50 SMA as a new support, which has been a support over the past couple of months, also holding previous old all-time highs as a support. So we'll see if Square can rally out of $140. And Foot Locker, guys, is another interesting one here that gave us data saying that their Q2 comparable store sales are up 18%. And let me see what else they said. They said some other good stuff here recently that had the stock up. And they got EPS of 66 to 70 cents versus the loss of 60 cents expected. That's what they're seeing for Q2. And that ended up shooting up the stock recently, if you guys can see on the 10-day chart. I mean, from $30 up, it was actually $28. The next day it went up to $36 pre-market. Now it's cooled off a bit, holding $30. So I'm looking at Foot Locker as a potential entry at 30 if this breaks out. Honestly, maybe 31, 32 if this overall resistance ends up breaking out. As a target out of it, I can see it going up to maybe $35. And two more here. Disney is another main one I'm watching here. Been doing very well. I believe Disney Plus reported over 100 million subscribers. That is incredible here, growing like a weed, unbelievable. And now Disney's getting back into that upwards channel. I mean, are we going to end up taking out these resistance? I mean, we already did the highs back from the beginning of June. We already took those out. We're trading above 128. We're at 130 now. So are we going to start going back up 135, 140? I would love to see, if we get a breakup, breakout of 133, 132, that could be a confirmation that Disney's going higher. And Lyft is reporting earnings on Thursday, I believe. Uber didn't do too well. I believe Uber's still down quite a bit. Yup, it's down quite a bit ever since it reported earnings. So Lyft is one worth watching. It's down about $13 off the highs here from recently at $40, $42, and it's off about $25 from the highs back before the crisis. So those are the main stocks that I'm watching here, guys, moving forward. My thoughts on the market, what I've been doing in terms of my trading, and kind of what I'm thinking here in the market, and kind of what I'm doing moving forward. So I hope you guys found value. As always, hit that like button for me. Consider subscribing to the channel. Don't forget to join our free Strive Smart Discord chat and Facebook group. Those are linked down below. And also, your 2 free stocks are linked down below, waiting for you to be claimed from WeBull. All you have to do is deposit $100 and you get your 2 free stocks. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. I'll see you in the next one. Peace out.